What's up everyone? Welcome back to the channel. If you're holding Kaspa right now, you're probably checking your portfolio way too often and, questioning your life choices. Don't worry, we're diving deep into what's actually happening behind the price action. If you find this breakdown valuable, smash that like button and subscribe, because we're covering every major move in the crypto space. Let's get into it. Kaspa's trading around 4.5 cents, hanging near the bottom of its range after getting absolutely wrecked over the past 2 months. On the surface, it looks like another altcoin bleeding out while everyone waits for Bitcoin to make up its mind. But zoom out for a second, and the picture gets way more interesting. According to Scape Squad on X, BGIN, a company trading on Nasdaq, now holds 235 million KAS tokens with an average buy price of 14 cents. That's not just a position, that's a statement. They're either unbelievably confident or spectacularly wrong, and we're about to find out which one. The disconnect is wild. The network's crushing it technically. Kaspa recently pushed 5,700 transactions per second, processed 158 million transactions in a single day, yet the price is sitting in the dirt like it doesn't matter. This is where things get spicy for traders and investors, because when fundamentals and price action diverge this hard, someone's about to be proven very right or very wrong. Now, before you rush to copy what the whales are doing, understand what's happening in the shadows. Active public nodes climbed to 744, showing steady community growth even during this downturn. That's not typical capitulation behavior. According to reports from Labs, the Caravel Testnet just processed its 10 millionth block without a single glitch. That's not hype, that's execution under pressure. But the real story lives in the wallet data. Wallet number 7 just added another 2.6 million KS, bringing its total to 339 million tokens. Wallet number 1, another 2.7 million added. These aren't retail traders panic buying the dip with their lunch money. These are major holders steadily accumulating while everyone else is nervous. So, smart money doesn't try to time bottoms perfectly. They just keep buying when assets are cheap and fundamentals are intact. The real question is, do they see something the market's missing, or are they about to learn an expensive lesson about averaging down into oblivion? The chart, honestly, tells a different story entirely. Every bounce gets sold into. Lower highs just keep stacking up. The 45 to 46 cent zone keeps rejecting any bullish attempts. It's that frustrating choppy action where nothing sticks and momentum dies before it even starts. Bulls need to reclaim the 48 to 50 cent area and actually hold it, not just touch it and roll over like we've seen repeatedly. Until that happens, the technical picture leans bearish no matter how bullish the fundamentals look. Let's break down what the indicators are actually telling us, because the setup here is more nuanced than bulls versus bears. The RSI is sitting in the mid-30s, showing weak momentum but not quite oversold territory yet. Open interest is steady around $231 million, meaning traders aren't loading up aggressively on either side. That's indecision, not conviction. According to recent derivatives data, long positions continue declining while shorts inch higher. That creates a slight bearish tilt in positioning, but it's not extreme enough to trigger a short squeeze yet. The MACD remains flat, showing fading momentum without any clear directional signal. This is one of those setups where a catalyst could flip sentiment instantly, but we're still waiting for that spark to appear. In my opinion, this is classic accumulation disguised as weakness. When price action looks this ugly but whale wallets keep growing and network activity keeps expanding, you're usually looking at a coiled spring rather than a broken project. So, the market's testing weak hands right now. Everyone who bought hoping for quick gains is getting shaken out, while patient capital just keeps stacking. Now, that doesn't guarantee an immediate pump, but it really sets the stage for one when sentiment shifts. The short-term outlook hinges entirely on whether Kaspa holds above 45 cents. If it slips under that level, the next support zone sits around 41 cents, which actually caught the price last week. Lose that, and we're probably heading down into the 38 to 39 cent range. That would be pretty painful for anyone who bought the dip at 50 cents, but honestly, it would also create an even better accumulation opportunity for those with dry powder. On the flip side, if buyers finally show up with conviction, the first real test is 48 cents, followed by the psychological 50-cent level. A break above those levels with actual follow-through would be the first legitimate sign that momentum's turning. That could set up a move toward 56 cents later this month. especially if Bitcoin cooperates and altcoins catch a bid. The fascinating part is watching institutional players like BGIN averaging in at 14 cents while the price trades at 4.5. They're either front-running a major development we don't know about yet, or they're drastically overestimating Kaspa's near-term potential. My take. When Nasdaq-listed companies start taking 9-figure positions in an altcoin, they typically have longer time horizons than retail traders. They're not trying to flip it in 3 weeks. They're positioning for 6 to 12 months out, possibly longer. The network metrics back up that longer-term bullish thesis. Processing 158 million transactions in a day isn't just impressive, it's proof of concept at scale. Most layer 1s struggle to handle that kind of volume without choking. Kaspa's doing it while maintaining decentralization and adding nodes. That's the kind of fundamental strength that eventually gets repriced, even if the market's too distracted to notice right now. But technical strength doesn't pay the bills if price action never follows. That's the harsh reality of crypto. You can have the best technology, the strongest fundamentals, and the smartest whales accumulating, and still bleed for months if market sentiment stays negative. Timing matters almost as much as being right about the fundamentals. This week becomes critical because we're approaching a decision point. Either support holds and we get a relief bounce that could turn into something bigger, or we break down and test lower levels that will shake out even more holders. The setup reminds me of earlier cycles where strong projects consolidated for months while everyone lost interest, then exploded when nobody expected it. What I'm watching specifically is whether those whale wallets keep accumulating if we drop further. If they stop buying or start distributing, that's a red flag. But if they keep stacking through another leg down, that tells us they have high conviction in what's coming next. Right now, their behavior suggests they're not worried about short-term price action at all. So, where does this leave us? Kaspa's sitting at a crossroads between technical weakness and fundamental strength. The price action looks concerning, the indicators show fading momentum, and bulls haven't proven they can reclaim key resistance levels. But underneath the surface, whale accumulation continues, network performance keeps improving, and institutional players are taking massive positions at prices well above current levels. This week we'll find out whether 45 cents holds as support, or if we're headed lower to shake out the last batch of weak hands. If you're trading this, manage your risk carefully because the volatility could spike in either direction. If you're investing long-term based on fundamentals, this might be the kind of opportunity that looks obvious in hindsight, but feels terrifying in real time. Before you go, check out my previous video on altcoin accumulation strategies during bear market conditions. Drop a comment below with your Kaspa price prediction for end of month. Are we breaking out or breaking down? I'll see you in the next one. Quick reminder, nothing in this video is financial advice. Crypto is extremely volatile and you can lose everything you invest. Always do your own research, never invest more than you can afford to lose, and understand that past performance doesn't guarantee future results. Stay safe out there.